Yes, the news here, Rivian Automotive, the EV, I got EV pickup maker. Is it a pickup truck, basically? EV truck maker. I think there's an SUV as well. Um, that was at one point sort of a market darling, has suffered a bit as of late. And Brett, actually, if you can pull up maybe a screen share here to demonstrate the cash balance, the short term investments plus the cash, so that we can get an idea of.
Yep, I will in about a minute here, tweeting out the link. But yeah, I'll get right on that after.
Okay, so the news here is that Volkswagen is going to be investing up to $5 billion into the EV maker Rivian. The It's structured a little funny, so it's structured sort of as a joint venture. The line from the Wall Street Journal here is Volkswagen Group is investing $1 billion into electric pickup maker Rivian Automotive, with plans to spend up to $5 billion as part of a software development partnership. So it's kind of this. Uh, I think they're trying to use Rivian to help kind of bolster Volkswagen's software offering in car software. So it makes you kind of think. It almost feels like this Lifeline for Rivian is almost gambling for Volkswagen. Like, I think it feels like Volkswagen's kind of the savior here. I don't know if I see necessarily the upside as much from Volkswagen's perspective. And I'm not exactly sure how this joint venture works out, or whether it's like an outright investment, how it ultimately, like, what the financial incentives are here. Um, but if you look at Rivian's financials, cash and cash equivalents, and if you go to quarterly, Brett, we can kind of see a better visual here, has dropped from $18 billion in cash and short term investments to a little over $7 billion, I believe, and as of the latest quarter. So it's been burning cash pretty quickly. And if you add the free cash flow on there, they burned, I think, through around $6 billion in free cash flow over the last 12 months. So this was cash that was really needed, especially if they get all 5 billion of it. You're looking at really a major lifeline. And I think the CEO of Rivian actually went on in an interview and basically said, like, look, this gives us the funds we need to actually get to cash flow positive at some point. And without this, it probably would have been pretty difficult. And it looked like, from the outside looking in, looked like this was a business that was going to struggle to produce vehicles profitably in the future. And especially with Rivian having plans for a low cost model or a lower cost model that's coming out soon, I think this is cash that was very much needed. I guess, what are your thoughts here, Brett? Why do you think Volkswagen did this?
Well, according to I think it was the Wall Street Journal article, they said that they're having trouble with any sort of software stuff in the whatchamacallit EV space, and the infotainment systems, the car stuff that Tesla's famous for, the Chinese companies are famous for, of being much, much superior to the legacy brands. They just really couldn't nail that. I don't know how complicated it is, but maybe it is very complicated. So that could help. Um, but I don't know why Volkswagen would do this, except, maybe the terms feel attractive to them. And Rivian does have a good brand. I mean, people love the cars. You can see the reviews. They think they're fantastic. You see them replacing a lot of the upper whatever Tesla Model X and S, the higher end ones, at least where I live. And I think that's all throughout the West Coast of the United States. And then Rivian, they're burning a lot of cash and they need to get to a higher scale in order to hit positive cash flow, just because with the vertically, they're manufacturing their own vehicles. So they're not doing any sort of partnership with an existing factory. They built it all themselves. So they need to hit some sort of scale. I think they're only doing about 15,000 deliveries a quarter. I mean, you need to get much, much higher, and that's going to take multiple years here. So it makes sense for them if they can reduce the cash burn to maybe, if you saw on the chart there, they have gone a little bit better over the last few quarters to about 5.5 billion versus 6.5 billion in cash burn. If they can get that down to, 2 billion or something like that, as they try to get bigger and bigger and bigger, I think the markets will appreciate that, and they'll understand that there's a path to profitability, and they'll give them, you know, room to raise more money and try to eventually get to scale. Because if they can be one of the second scaled EV player along with Tesla, you know, there could be some benefit there, especially at this low valuation. I would say though, a lot of people, and this is a lesson on. Sorry, my light gets way too. I don't know why it does that. For anyone listening on YouTube, I can never figure out how to fix that. It just kind of comes and goes. The light is actually not changing, but that's besides the point. If we look at what was I trying to say here? The investors that look at Rivian, you have essentially a market cap of before today like $10 billion. And I think it's a lesson in saying, look, given the balance sheet, and you have to really look at the balance sheet before looking at something, you probably should have priced in something like what happened yesterday, where there might be 100%, 200% dilution, and that could be okay if you're going to get the growth along with that, but that's something you need to price into your valuation work. You can't just say, oh, well, they have this number of shares outstanding. The enterprise value is actually lower than the market cap. Well, I wouldn't include that because the cash is going to get eaten up almost entirely. And we have a market cap of $10 billion. Well, the stock looks kind of cheap if they can scale. Well, no, you got to price in that cash burn and the potential equity dilution. It's just all part of the valuation process.
Yeah, I think people consistently underrate the complexity involved in building a successful automotive business, like a profitable automotive business at scale. Like Tesla would not have been able to do it had it not been for the investor buy-in. Frankly, like the cash they were able to raise really gave them the runway. And pretty much every EV maker that we looked at, I remember, or any automotive company that started as of late, they expected cash flow a little sooner than it came. And there's just it's almost like the airline business in a way where there's just always costs you don't expect coming due in the next quarter, and inventory becomes an issue. And then the other part is interest rates probably don't help. It probably doesn't help people finance cars, so it makes it even more difficult. Yeah, I think they would have had basically a year, maybe a little over a year of burn rate at this point. So this is cash they certainly needed. The CEO seems to think they can get to cash flow positive with this new cash infusion. So certainly helps. The other thing that was interesting is there's been that inventory buildup on the balance sheet. I was kind of sharing my screen there. Maybe that can kind of help with cash flow if they're able to sell through some of that. But at the same time, it's maybe concerning that that inventory continues to grow when they should be selling cars kind of at will now. So I don't know. I guess there's some concerns. I will say anecdotally, a lot of Rivians on the road here in the Pacific Northwest.
Yeah, there are, but I do agree that you got to look at, if you look at that anecdotes, you could say, oh, okay, a lot of the wealthier people out there are buying these Rivians. They're very expensive. They probably have good unit economics. I will say, I think their costs are still extremely high. So I think they're giving quite the consumer surplus on these vehicles, which is going to make the customers happy, but eventually you got to make money. But the thing you mentioned there about the inventory buildup is, yes, they're still at such a small scale on their deliveries number. They're not even close to the scale you need, about of 1 million cars a year, maybe, or maybe for them as a more premium car maker of 500,000, 400,000, 300,000, something like that. They're so far away from that would concern me. Like, okay, you're already hitting a deliveries wall and you need to kind of innovate and lower prices here or come out with new models. That's kind of troubling, wouldn't you say? I think that's the number one concern I would have with this company. But given how much people appreciate the cars, and given we shouldn't forget that 100,000 vehicle Amazon partnership for the commercial van side of the business, I think
Did that not
after
get
this
scrapped?
capital raise, it makes me more. Obviously, the stock went up 50%, so it was a good thing. It makes me a little more bullish on the company.
I thought there was some sort of falling out between Rivian and Amazon, whether it was
No,
like
I
they
don't think
sold
so.
their equity stake or something with the contract. But I guess you've been following it closer. So yeah, I don't know. I'm I don't think I'll ever touch Rivian. I don't know if I'll ever own a car company in general,
Yeah,
frankly. It's just a business I don't really want to be a part of.
I like airlines more than cars, to be honest.
And I don't like airlines.
Yeah, exactly. That's a low bar to hit. Got some questions in here if we want to flip to another topic. Someone asked on Nick's sleep. Do you think Nick's sleep would have switched away from deep value if his AUM hadn't gotten larger? I.e., was the switch made because deep value doesn't scale as